Hi, I'm Michael Yardney, and today I'd like to discuss the concept about timing in the property markets, because some people are asking, is it too late to get into this property cycle? Obviously our markets have performed very strongly for a few years, but they've now slowed down, leaving some investors wondering, well, maybe it's too late this time around. They wonder if they've missed the boat this property cycle. Now, I understand why they're thinking this way. It's partly because it's often said that timing's everything when investing. But I'll let you into a little secret. That's really not the case. Timing, in my mind, is one of the most misunderstood concepts with regards to property investment. The truth is, successful property investors know how to create wealth at any stage in the property cycle. Timing definitely matters. Of course, you don't want to buy your properties right at the peak of the boom, just wait 3 or 4 years for their values to increase again. But I've noticed that successful investors find timing really doesn't seem to be that important. Have you noticed how some investors seem to do well in good times and do even better in difficult times? Market timing really isn't important to those successful investors. On the other hand, others do poorly in good times and even worse in bad times. Market timing seems to have very little effect on them either. Now that's interesting, isn't it? So what is it that differentiates that small group of successful investors from the crowd? The fact that successful investors manage to make money while at the same stage of the cycle the average investor loses money suggests to me that it's not our external world that determines whether we make or lose money. It's something inside us. Now many would argue, well yeah, that's knowledge, but I don't think that's actually right. Sure, successful investors may have a level of knowledge and financial fluency that the average investor lacks, yet knowledge alone doesn't make them successful investors. In my studies, I found what allows some people to become super successful investors is their mindset, the way they think about money and the way they think about wealth. In his book, A Tale of Two Cities, Charles Dickens famously opened it by saying it was the best of times, it was the worst of times, it was the age of wisdom, it was the age of foolishness. Amazingly, things haven't changed that much since Dickens wrote that way back in 1859. For some people, the current stage of the property cycle seems to be the best of times. For savvy investors, the current times are an opportunity to buy top-class property assets that'll help set up their financial independence in the future. These people, these successful investors, see abundance all around them. For others, these are the worst of times. They only see the negatives in the media. Property prices at record high, lower capital growth, unemployment's climbing, overseas problems. Others are saddled with some investment debt secured against the wrong type of investments, such as properties they bought a year or two in the mining booms, where values have plummeted, or they bought in the regional parts of Australia, where I guess prices have remained stagnant. I know there's other people who are saddled with consumer debt struggling to pay these off. So those people don't see all the available opportunities. They don't see abundance. They see scarcity and they feel fear. You'll need more than knowledge and facts. As I explained, knowledge alone won't assure your success in property. I've seen some very knowledgeable people make some foolish investment decisions. Interestingly, while some investors are currently getting in the game and buying great investment properties to help secure their financial future, others, they're waiting for the timing to be perfect. Look, only last week I spoke with David, who'd been waiting for 10 years for the timing to be just right to start investing in property. The timing will never be just right. There's always going to be challenges, there's going to be situations, circumstances, obstacles, fears and doubts, and things you're going to have to overcome. The timing is never going to be perfect. I know 10 years ago David saw some obstacles and didn't get into the property market. He didn't buy property investment. If he did, chances are that if he bought in one of the good capital cities, it would have doubled in value by now. Even if he'd made a mistake and maybe not got the timing of the cycle right, or maybe paid a little bit too much. I've found that wealth is attracted to people who are decisive and committed. If you're waiting for the timing to be perfect, the timing will never be perfect for you. Currently, property investors are being given some great opportunities to buy fantastic properties when the heat of the last couple of years seems to have come out of the market a little bit. Personally, I've added to my substantial property portfolio recently, and I'm going to continue to do so. And I did that last year, and interestingly I did it the year before. I'm not really worried about timing or the current stage of the property cycle. The list is long of wealthy Australian property investors who sowed the seeds of their substantial property portfolios now with remarkably poor timing at the advanced stage of the property cycle, way back in 2007-2008, as well as those who did the same in 2003 and 2004. It was much the same in the early 90s. These successful investors were busy doing while others were pondering. Yes, we're moving into the next stage of the property cycle and seeing some major changes in the economic landscape. Look, while timing may seem unfavourable for some property investors, right now, others are going to do very well over the next couple of years. But that's always been the case. I'm certain from now in 5 years, maybe 10 years from now, there's going to be a group of successful property investors who are going to tell stories of buying properties when others were advising them not to, when things seemed difficult, when the media was negative. They were buying properties right now. If you want to better understand what's happening in the property markets, at what stage of the cycle we're at in the various states, get a feel for what sort of real estate you should be buying to take advantage of this mature stage of the property cycle, why not come along to one of the offices of Metropole in Sydney, Brisbane or Melbourne, or if you're in a different state, we'll do it by Skype and let's have a chat. If you're a beginner, we'll give you some guidelines as to how to get into the property market. If you're an experienced investor, we'd love to have a chat with you and see how your portfolio is performing. I couldn't say that, could I? How your property portfolio is performing, and see if we can give you some hints to how to take advantage of the markets so that it's moving ahead. All you've got to do is give us a call at Metropole or our website metropole.com.au.